Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, January 19th, 2024. As always, we'll start with the executive summary from today's lead-off morning note. If you would like the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So we'll start with today's key macro event, which is twofold. So number one, Japanese inflation takes the edge off of next week's BOJ meeting. And number two, bears risk getting steamrolled again if the cross-asset correction does not accelerate in the next 2 weeks. So starting with the nuance, Japan's CPI decelerated on both the headline and core basis in December, taking the edge off of next week's BOJ meeting in the process. We continue to view the BOJ's April 27 to 28 meeting as the earliest catalyst for further policy normalization in Japan. From a market implication standpoint, the next 2 weeks present investors with a bevy of key macro catalysts that each threatens to unravel the soft landing consensus implied by the current Goldilocks top-down market regime. On the flip side of that is if Goldilocks could survive well into February, the remaining holdouts from the no landing and hard landing camps will be forced to chase Goldilocks into the spring. In that instance, our positioning model would likely indicate investor positioning and asset valuations have finally become full enough to warrant a significant cross-asset correction. So transitioning to our 42 macro dashboard here, we'll start with some of the trading range signals from our friends over at Longbow, getting an overbought signal in agricultural commodities. So if you're long those, definitely take some risk off the table there. Pretty wickedly overbought. We'll keep moving here. We're getting a near oversold signal in the VIX. Yeah, we bounced from overbought signal earlier this week to a near oversold signal. So that was quick heading into today's OPEX. And then we're getting a near oversold signal in Bitcoin, but not quite there yet. Got about $1,000 of base downside to the lower boundary of that trading range. Transitioning to our 42 macro aware community, we'll get a question here that reads, I was going to put on the options recommendation made yesterday being Wednesday from the perspective of this question, but the lower probability of recession and more likely rolling recession has made me pause. Should I wait a bit and see, or does the lower likelihood of recession matter at all? So the answer to the question is yes, the lower likelihood of recession matters at all. But it matters, but it's as always one of the many fundamental and quantitative inputs that we're using to structure those discretionary options overlay trades with our friend Imran Laka over at Options Insights. So, in terms of our portfolio construction hedge process that we go through every week, it's a very robust process. We probably spend about 10 minutes every week going through the various quantitative components of our quantitative signaling process, in so much that we go through the various macro catalysts and fundamental catalysts that we see in the context of some of the legacy themes or some of the themes that we see developing coming down the pike. So it's an extremely robust, thoughtful process every week. Process being the key word there, because we do the same thing every week in terms of helping investors structure those options trades, both to the downside and also to the upside, and in terms of asset markets, because obviously risk works in both directions. So we'll wrap it up there. Darius Dale presenting our macro minute for Friday, January 19th, 2024. Everyone have a wonderful day. Best of luck out there. Have a wonderful weekend, and we'll catch you back here on Monday. Cheers.